How do you see AFC playing a role in the climate finance discussions and innovations? And how do you see Baku overall?
Our role in climate finance, I think we see twofold. If you look at it in terms of who one makes the intervention with, on the private side and on the public side. I think we are still gearing up on the public side, and there's so much more that we can do, but I'll start on the private side. We are one of the institutions that have historically focused on project development, which we think is absolutely critical in terms of structuring bankable projects on the continent, especially around climate finance. And I think the work we're doing on the Lobito Corridor is testament to the historic work that we've done specifically in this space. On project development and in climate finance, I'll speak a little bit to some of the work that we've done. I think today we are probably one of the largest co-owners of the largest renewable energy vehicle in Africa. We jointly acquired the Infinity asset, or the Lekela assets, with Infinity, our co-partners, and it currently operates circa 1 gigawatt of energy. This includes wind and solar power in Egypt, in South Africa, and in Senegal, and we're quite proud of the work that we've done there. On the development side, we've also done a lot of work in Djibouti and in Côte d'Ivoire. In Djibouti, we recently reached commercial operation stage on the first wind IPP, the first IPP in Djibouti, also the first wind IPP in Djibouti, 60 megawatts, so quite substantial. We believe this work is important because you need multiple institutions such as the AFC able to unlock opportunities like this that can be easily replicated, right? The work that we did in Djibouti is a reflection of a lot of this historic work that we did on the Kebioleka project in Cape Verde, which is the first wind IPP in Africa.
So I'm the CEO of SFK Capital, focusing on climate financing in emerging markets. So we run accelerator programs and we structure sustainable investment vehicles. One of the examples that Aubrey is referring to is the Liquidity and Sustainability Facility. And I sit on the board of the LSF that was launched 3 years ago now. And it has as a main objective to increase the liquidity of sovereign bonds and to incentivize more green bonds. So on the LSF, there are 3 key pillars. One of them is to increase the liquidity to repo market transactions, and that's similar to the transaction that was announced with ADIA and with Citibank. And we added 2 pillars to that. One of them is to create a GC basket to incentivize interbank flows, and that was announced at the LSE in London in partnership with Euroclear. And the third thing that was launched as well is the iBox LSF USD Africa Sovereign Index. And why is it important? It's important because it calculates and assesses the impact of sovereign bonds. And it allows also to create ETFs on the back of it. And at the moment, we are in discussion with institutional investors to get and to scale that part of the business.
Obviously, IFC is a major player when it comes to climate finance globally. And as you look at this COP from an African perspective, how do you see the major outcomes helping to move the continent forward?
I do think that it has been generally quite positive for the continent with various opportunities. I'll start off by just outlining a little bit of IFC's work on the continent in 4 main areas. One is strategic investment and policy alignment. IFC has been aligning its investment strategies by directly investing in projects or indirectly through financial institutions, investing in projects that are really focused on climate. And this is really helping to mobilize capital that will bridge the gap that most African countries need to implement the national determined contribution. So this is very directly focused on helping opportunities in the market. More so, in this alignment is also looking at how, directly through financial institutions, we can actually mobilize more capital with a focus on climate. The second is innovative financial instruments across all of these projects, whether it is issuance of bonds or directly investing with climate targets and ensuring alignment to the global principles and guidelines, those financial instruments have really helped to mobilize capital, bridging the gap. It has helped a lot of financial institutions to start transitioning their portfolio exposures. And by leveraging a lot of the tools and instruments that IFC has put together with this instrument, including concessional financing, we've seen the financial sector really starting to mobilize private investment towards more climate initiatives and with targeted use of proceeds, really supporting to bridge that gap, which was a key topic of discussion at COP, and I'll get to it.
Are we seeing a big uptick in green bond issuance? When we looked globally last as part of our work in climate finance, African green bond issuance was as a percentage of bonds and as a total amount was quite small relative to other regions. So do you think we're turning a corner there?
Yes, we are turning a corner. We've seen a deliberate uptick and growth, especially in the last 2 years. I would say a good example is Tanzania, and it really, the pressure is kind of on the two sides. So the part of the work that IFC is doing on policy alignment with governments has actually seen the central banks issue guidelines on climate risk disclosures for the financial institutions. What that has done is then put some element of pressure to the financial institutions to really look at how do they start transitioning their portfolios, and that has created a sort of an impetus towards issuing of more green bonds. So good example, great success was in Tanzania last year, where we had two financial institutions, one issuing a green bond, one issuing a sustainable bond. This was CRDB and NMB respectively. And both of those have now really focused on one side meeting the regulatory requirement, but at the same time starting to have targeted use of proceeds out of the issuances that is supported this. And IFC came in with blended finance to actually support certain targeted areas, such as one that we launched at COP, which is around building resilience in the construction industry. This we did in Tanzania, as well as being an anchor to these investments to really kind of supporting and mobilizing, creating confidence in these issues for other investors to support.
It's very difficult actually to provide a conclusion to the COP, as actually events are unfolding in Baku. There's been a tentative agreement, a tentative draft text that has been actually released. And so far, the first reactions are pretty mixed. So we'll see what's going to happen in the days, in the hours to come. So definitely, I agree with my colleagues here on the panel that actually there have been some advance, some progress, especially in terms of carbon finance. The agreement that was made, that was done on the first day, was actually a major achievement. But if you consider, for example, the position of the African group of negotiators, but also the African Ministry of Environment, they've been complaining, for example, for the lack of results on loss and damages. That COP was normally the place where beyond the 700 millions that have been pledged, the fund, the loss and damage fund, should have been actually provided more substantial resources. As you know, actually, in terms of loss, and it is estimated that the needs, the requirements are approximately around 100 to, let's say, 200 billion USD per year. So we are far from that. So for African negotiators on that loss and damage issue, actually, there's much actually to be discussed. And especially as it has been postponed to next year, the discussion on loss and damages.
Now, let's start with a little bit of a progress report from Afreximbank. Mr. President yesterday spoke a little bit about what you've done so far in the organization based in Cairo, but give us a sense of, summarize that for me in about a minute or two.
Okay, so Afreximbank now is, as you know, it's owned by 53 countries of the 54 countries in Africa, and we have a mandate to support trade finance in and out of Africa and investment. We're very keen now to spread our support across. You see us supporting countries import their main raw materials, increasing the capacity of banks in countries where their local banks have limitation, providing a lot of ACA support into the countries, advisory syndication. It's a lot of effort. Now our balance sheet approaching $40 billion, and they're all driven towards this. We have a very clear mandate of what we call additionality. We do deals that do additionalities to the countries that we operate in, creating work for people, additional value adding. You've seen us yesterday on the gala dinner. Most of those transactions that help indigenous companies in Africa acquiring foreign assets and operating it are actually, we're the name behind it. Like, we were looking at this award yesterday and thinking anyone who will win, we will be winning, because such a proud thing to do, helping African operate this. We also now working with a lot of countries on the value addition stream. You've seen us in Gabon and Benin. We're now taking countries from exporting cottons to garment, exporting wood to furniture, plywood. We're trying to tell Africa that the margins, you stop exporting your raw material or cotton and buy it back as garment with double the price and multiple price. Own the margin, keep the capital inside. We have a big drive now on how countries can use the raw material to build capital, but also focus on industries that create jobs and that create capacity building for SME. You see in Nigeria now how the oil sector, you have a lot of SME capacity has been built to service this industry rather than just importing it from outside. So a lot of development effort around, a lot of focus. We're not only focused on the trading of oil, for example. Speaking of oil, we're focusing on helping African countries own their infrastructure. It's a big mandate. We're trying to cover as much as possible, supporting our member countries.
Thank you, Haytham. Why is it important for Africa to do this?
I think our mandate is clear for us, because we need to own the narrative. Like, if Africa does not start, look at the Chinese story with Japan. When China they started to build capital for development. They used the raw material in structures with Japan to build capital to help them develop, and then they own the raw material. They start to do the value addition. It's very important for us now to diversify. We have a lot of economies that based on raw material export, oil included. Having been, you see in the current trading level between the African countries at 15%, Europe is 60 plus. And this shows that we don't like to trade with each other. We have to change this. We like to import from outside. We have this perception, and it's easier for us to export to outside. We need to shift this, and we're doing a lot on this front. Like we're working, working with AFCFTA on the PAPS initiative, which is the clearing of currencies across African countries. So actually, as we speak now, countries can import and export to each other with their own local currencies. So Nigeria can import tea, for example, from Kenya in Naira now, as we speak.
Yes.
And this is a big shift, because this will put less pressure on countries sourcing dollars. One step in liberation. So a lot of these steps, whether in your transfers and trade settlement and financing and building capacity, we're also looking ourselves at a big supermarket bank for other banks to use this to operate in their countries. It's not about competing with banks, it's about making the local banks stronger and stronger, invite them to our deals, structure with them. We have a huge experience because we've seen it all in all countries. We can share experiences between countries on how best they can structure, own things, acquire, trade, and this is what we're trying to share across. It's economic liberation.
Interesting. Now we've got energy transition on the table, globally speaking, and we spent decades exporting natural resources out of the continent, and we still lack infrastructure within the energy industry. Now we've got to add the energy transition into cleaner fuels and what have you together. So we've got to fix infrastructure and very quick, not just for the traditional fossil fuels whatsoever, but also for renewables as well. So it looks like we need more firepower in terms of funding.
Yes.
So where do you think we can find this money? Where do you think the folks in the audience here would look forward to see the money coming from, the investment that we really need to build a break?
Very good. So apart from our topic on energy bank, let's talk about the traditional ways.
Yes.
So there is a lot of work that we need to do on reinforcing the way we look at PPPs projects and bringing private sector to this. Very important to bring this. The other thing is, how can you use your raw material at the beginning to create capital? Because we're between two dilemmas. Shall we export our raw material to create capital, or shall we keep our raw material processing and do value addition? And you really need to do the magic balance between there are raw material like aluminium, for example. When you process it, it's heavy capex, low labor, exported now, while other things, no, process this in-house. This delicate balance countries have to see, and they have to use the raw material to create capital while focusing on other value addition, other raw materials. So use your raw material to build capital, use PPP. We do a lot of work with ECAs, especially on the infrastructure side. And this is where our role comes with the local banks. How there's a lot of ECAs around the world that can get the right mandate for the countries to do the next road or the next bridge or things that sits on their mandates. So a lot of discussion need to be done there. The other thing that we do is, because we have our convening power, people trust our name when it comes to Africa transactions, we can bring investors along with us when we talk to countries. So it's not just us contributing, it's because we're in the deal, the trust between us and the countries. People like those deals and come across. Most of those deals that you've seen last night were one part, and a lot of investors following us. So there's a lot of deals around this. There's a lot of guarantee structures we do to help countries secure those infrastructure with foreign investors. But I would say PPP is the main thing, and a lot of other things can follow. It's very expensive to borrow in Africa compared to outside. So the transition to development and building projects and spending on projects and borrowing to do this, it's actually expensive for Africa, which is make it more difficult for them to quickly transition. So is it 2030? I think Africa is much bigger. You know, in the map, Africa's drawn small, but it's actually very big.
54 countries.
Like, let me put it this way. I was coming from Cairo to Nairobi. Nobody knows that it's much nearer to go from Cairo to Beijing, China, than to go to Nairobi. So to Beijing is 7 hours, to Nairobi is 10. So this is how big our continent is. We don't. So there's no timeline for that. I think for each country there's a specific timeline. Depends on two factors. Can you if the economy is not oil dependent, can we really finance the transition? And if the economy is oil dependent, this is a bigger problem, because we need to finance to transition the economy first and then transition to energy. You heard recently we started what we call the AMFI, the Alliance of Multilateral Financial Institutions. Basically us and the big multilateral who's Africa run, Africa governed together. EU is a big sponsor for this. Ministry of Finance during the last EU have issued a lot of statements in support from this. Also, a lot of statement was issued that countries need to start to strengthen their multilaterals to support them to do this transition, to do this finance. I think the collaboration between us and the African Union is amazing, because we represent the financial arm that can move fast with them. Us and the Africa Free Trade Agreement, AfCFTA, is amazing collaboration also. It's happening far, but the homework is a lot. Like, we have big mountains to push.
Energy Week 2024.
I want to welcome everybody to this city, Cape Town, to Africa. Many call it Africa. We call it home. Welcome home.